Hi everyone, my name is Suyin. Welcome back to my channel. Actually, I just filmed this video right before this and there was like this loop of hair that was a ringlet here for the entire video and I thought it would be so freaking distracting. I am re-filming this and let's give second round a go. So let's get into the video. So today we are going to be talking about StashAway again as a portfolio update, and I think it is a very necessary time to talk about this because we are in a period of uncertainty and the uncertainty has affected our markets, and when markets are affected we can see all sorts of emotional behaviors in ourselves and in our friends and in people that we don't know. And it causes a lot of confusion and a lot of anxiety. So let's discuss how we are going to navigate that and what I am doing in my StashAway portfolio. So if you're interested in that, stay tuned. Okay, so first off, what is happening? We are in early March right now, and let's backtrack a little bit. In December and January, the markets were really doing very well, especially in the US. They were kind of like in this like little bit of a extreme bull run, and people were very bullish and buying a lot of US stocks and chasing up the prices. An example would be Tesla's crazy rise. I will show the graph here. I'll give some space and show the rise in the graph of the share price of Tesla. It was insane. And right now in February, we have well, not now, but like late February, which was last week, we reached a point in the market where it decided to dip. And when a market dips, it's all about sentiment because the market is an aggregate of all of our emotions, traders, investors alike, and it is aggregated into what we know as the stock market. So the stock market is actually a very emotional place, and for people who are seasoned investors, it is a very interesting place that you can grow your wealth. And that is like with many caveats that you have the right strategy and you have the right strategy to perform, especially in times of crises. So I've gotten requests to make this video, but it was very timely because I was looking at my StashAway portfolio and seeing negative returns for the first time, and I was like, this is pretty interesting. So we're gonna discuss just that today. So I've got my trusty phone here and I am going to do a screen recording. So when we look into StashAway, if it's not detecting that I have fingerprints, okay, wait, it's working. We are on the interface, we are on the home page, and as you can see right now, when I click on that, we can see the graph has dipped over here. Oh, you can actually see how your value has performed over time. Oh, I didn't know that. That's really cool. There is a small dip here, and I think they give you a date, 28th of February. That was last week. You can see that 27th of February, there was a big dip for my particular portfolio, and then there was an improvement, and then now it's dipping again. So we had worse returns in the end of February, but right now my portfolio is giving me a really amazing number of negative 43 ringgit and 4 cents with a time weighted return of 1.52% and money weighted return of negative 3.46%. So what is going on here? This is completely normal, especially when we are looking in terms of the US market. At the height of my StashAway portfolio returns, I was seeing something like 15%. I didn't document that, but that was like a period of time where it was growing at 15%, maybe a bit less, I cannot remember. But basically, right now that's not the case, and I'm okay with that because the market is going to be volatile. And there are going to be dips because markets behave in cycles. There are going to be times where there is like a recession in the economy, and there are going to be growth periods and peak periods, and then they will have troughs all over again. So this is completely normal, and when we are long-term investors, that is the beauty of it. We are not really affected by these short-term dips because we are looking at longer horizons of 5 years and 10 years and beyond. And when we are investing our money, we are actually investing money that we don't need, that they are not our emergency funds. We don't need to dig into them. So there's really no reason for us to sell these investments, because the moment we sell them, we are locking in a loss. Or let me caveat that. The moment we sell them in a period of downturn, like it is now, we are locking in that paper loss and converting it into being a real loss. So I have not made a loss right now in actual terms, but I am making a paper loss and I'm okay with that. So what I tend to do during dips is I actually want to invest more money into my portfolio, and that sounds crazy. So like say when your stock portfolio or your StashAway portfolio is doing really badly, I think it's the best time. It's not advice here, I'm not giving advice, but saying personally what I do is to invest more money into my portfolios, because it tends to be sometimes particular stocks are oversold and there are deals there are undervalued stocks. I'm talking in terms of like a specific stock that I'm buying in my portfolio. There are a couple right now that I'm looking at. And crises are also forms of opportunities, and seasoned investors have made so much money during crises and market downturns. So we just need to be ready for them, and we just need to have a strategy in place. Because if you wait to create a strategy when the shit actually hits the fan, it kind of is a bit too late to react. And it is more important that we are prepared for things that could come our way and we can seize those opportunities. Again, it's just my thoughts, and it could be completely wrong, but it is right for me and I am okay with that. So what is important here that I want all of us to look at is actually the transactions. And as you can see, oh yeah, I need to update you on this. I've gone back to reinvesting or direct debiting money into my StashAway account every month, and that's because the markets are so volatile right now that I want to be able to have more control as to what I'm doing in my portfolio. So the direct debit is still ongoing of 250 ringgit. But in times like these, I actually want to be able to put more money into my account when I want to. And something that you need to take note of is that when you transfer money into StashAway, it's going to have a lag period of time where it takes 2 to 3 days for them to process and then buy the ETFs for your portfolio. So the lag time is something we need to take note of, but again, we cannot catch the market at the ideal time, and that's really not our jobs if we want to invest on autopilot and if we want to invest with peace of mind. So I can just briefly show you that I've been very consistent, except in December I actually invested 750 because I thought I was investing for the quarter, but I figured, oh, okay, yeah, that's fine. I invested a bit more there. I'm okay with that. Back to 250, and I can top up if I really wanted to during the big dips, or if there's a crash coming, definitely gonna put more money in there. Just personal preference. Okay, back to transactions. We want to switch to StashAway index so we can actually see what they are buying for us. So here we can see my buy orders in February and January. So I'm just gonna compare these 2 months, because in February and January I invested 250 ringgit for both of the months, so they are comparable. And the currency conversion in February was lower, so my 250 ringgit bought me 59 USD, but in January my 250 ringgit bought me 61 USD. So the ringgit was stronger then, or the US dollar was weaker, who knows, whichever way, right? And if we click on buy order, we can see all of the specific ETFs that they are buying for us within our portfolio. Mine looks like this because I am on the higher risk index, and I am okay with taking on more risks at the expense of more potential losses, because this is what I like to do for this particular portfolio. And they have a whole number of different ETFs that they buy for us, and this is super important, and I'll show you why in a moment. But I've also created an Excel sheet to show you the differences between this February and this January buy orders. So they're buying the same ETFs, but they're buying different amounts of them based on the current price during those months. So a very simple example that I want to show you is from January to February. You can see the price of IVV. IVV stands for, I have no idea what it stands for, but if you do a quick Google search, it is showing you the Vanguard's S&P 500 equivalent, where it tracks the biggest 500 companies in the US on the stock market. And you can see that in January, the price was higher than it was in February. So because the price was higher, it bought me fewer units of the IVV ETFs. And that's how the market works. When markets are doing well and things are, you know, at a peak or like very, very bullish, things are expensive. And when the market dips, that's kind of when we can buy more units of the same ETF or the same stock. And that's a really good strategy to be able to buy more during the times when they are underpriced or undervalued, considering that we actually know what the value of it is. So that's the complicated part. Yeah, I want to show you this, right? If we go back there and we are looking at assets, you can see that 72% of my StashAway portfolio lies in the equity sector. And what I really want to see is the performance of these stocks during this time period since I have invested my money. Now we can see exactly what these ETFs are and what they represent in this portfolio. So as you can see, XLE, which is an energy ETF, it has performed at negative 19.04%, and that is no bueno. But the technology and healthcare ETF, XLK and XLV, have performed in the positives of 11.78% and 9.06%. So this whole basket of ETFs exists to diversify our portfolio and to balance out our portfolio. So one particular ETF can be performing quite badly, but another ETF can be performing quite well. So overall, as an average, your portfolio is A-okay. And that's what is important about portfolio allocation, and that is something we don't need to worry about because we are investing in StashAway and because we are entrusting them with, you know, allocating our portfolio and re-optimizing our portfolio because we have opted in for that. Okay, so I guess that's all I want to share about StashAway today. I want all of you to know that it is okay to have emotions, and we are bound to have lots and lots of emotions in this sort of time period where it's crazy, it's confusing, and write it all down. It really helps to keep track of what we are thinking and just like dump it all out. It is a practice that I am getting accustomed to, and what's important is that we don't act on those emotions, but we act on the logic and the strategy that we have set in place, and that is what is going to set us apart as really great investors over time. That we are not easily spooked by what other people say and what other people think, and we just need to come up with our own thing, our own strategy, and our own values when it comes to investing. So I think that is it. That's all from me today. I hope you enjoyed this. I will see you in the next one. Bye!